Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 3rd, 2021. I wanted to get a video out early. This one I'll keep it kind of brief. Here's what I'm going to talk about. Quick update on the equity markets. And then I want to hit on the precious metals, not just gold and silver, but I want to do an update on platinum, or update on palladium. I got one out to you this morning. We hit that first target quick. Platinum's also setting up, and I think the metals are looking good right now, poised to run all four of those precious metals: gold, platinum, silver, and palladium. So those, and I'll probably add in one or two other things that I can think of. I'm kind of ad-libbing this one. Don't even have notes on my scratch pad. So let's start out here. Let's dive into the equity markets. Okay, not to beat a dead horse. I'm doing frequent coverage on this, and you know, it is what it is. It's either going to pan out or not. I won't go over everything that's happened recently, but just the last few days here, I've been highlighting this kickback after the break of 390, which was another sell signal. Pretty much call it, well, not just three sell signals here, 1, 2, 3 on the 60-minute chart, but you had the bearish engulfing candles on the daily and weekly charts of both SPY and QQQ. So on that time frame, you had check marks there, at least on the daily. Well, today's Friday, so we'll know. Depending how today finishes, I believe we will get a check mark on the weekly chart. Remember, on a weekly time frame, if you're looking at candlestick patterns, bullish or bearish, all that really matters is how the candles close the week. So that's it. So we've got some check marks, and say the same thing I've been saying since yesterday. This is it certainly is an objective short entry, and I'm starting the video, and that's exactly what I wanted to see there. We popped, a hair above, give or take, QQQ is almost 400 point security, so you went up above 390. In these levels, sometimes you reverse right on them, and sometimes you reverse a little shy, a little above, but that's still within very much. That's 0.5% above there. So just a beautiful bear flag and beautiful action so far as the morning's early. It's 9:53 right now, and there's that breakdown. Like I said, you could either your objective shorting entries in the last couple days are kickbacks to the 390 area. And or, which we now have, a break, and ideally an impulsive break below the bear flag pattern. That's exactly what you want to see. Now the day is very early. This is the first candle. It's still working on the first candle. The day is finalized at 10 o'clock. Then everyone after that, I believe, if I'm remembering correctly, will be finalized on the hour. So you got a 30-minute candle here, and that's it. It's impulsive. It's a sell signal. Take it, don't take it, do as you want. But if it plays out as the pattern would project, as I told you several times, the measured target would take you down to whatever that is. Do it here again. There's the line, there's the flagpole. Made it a little bit longer there, so I'll put it just above. And that take you down to somewhere around there, T3, almost to T3, T2, or almost to the T3 third target zone. All right, so that's that. And then the other board I shared you was the head and shoulders pattern. So just a lot standing out to me in the technicals lately. Head, right shoulder, neckline breakdown, triggering a sell signal, kickback, giving you another objective short entry if you missed it, or if you, for whatever reason. And that should project down there to around that 370, 376-ish target. So that's that. Let's not talk much more on it. If this gets foiled and they start buying up the equities, then you still have downtrend line resistance as well as a potential backtest of that, and that would also offer an objective entry. Although I would much prefer to see this, just because it would show you a lot of, like I said, a lot of sellers coming in right now and helping to show the supply demand dynamics have shifted. So anywho, this is again early in the day. We'll update that later. Let me show you one more thing here on the small caps. IWM. This is one to watch. This is a very, very big, well-defined, multi-month, pretty much a year-long trading range. You turn off all the lines, you can see it here. I'll box it in for you. But again, it's hard to miss that. That is a powerful level of consolidation, because it's a year long with the small caps going up, down, up, down, up, down, and nothing but sideways. And so this is going to break one way or the other ultimately, and based on my indicators. It's not just because I have bear goggles on. I can see divergences building. I can see a recent overbought condition. Here's your PPO divergence down here, but that shows through much better on the weekly. So let me jump over to the weekly. And before I do, where do I think this will go if we get a downside break? I've talked about this quite a bit. This is a big old thin zone right here. You can see my volume at price histogram bars. They come out to right here. So that just tells you, when you scroll back this far, that's because the majority of the volume is right here. It makes sense because we've been in that sideways trading range for a year. Very few people bought on this rip right here. You had a breakout. We had a previous all-time high there. That was a drop before COVID hit. Fed gunned it back up, and then we broke out above to new highs, and it was a rip. It was a breakout. It stuck, but you can see down here, this is where there's a lot of bars. So what does that mean? Again, no guarantees, but it tells me that if and when we get a solid break below there, we're probably going to drop, and it'll probably be a relatively swift drop because of the thin zone all the way down to 170. And so that would be, let me turn off these lines so I can measure from the bottom. Let's just go from where we're at now. Let's do this and drop down to 170, give or take about a 21% drop. All right, so now let me go to the weekly chart and I'll wrap it up. So, okay, this is what speaks volumes to me. The weekly charts, it's easy to get lost in the world of the 60-minute charts and the daily charts, but this is pretty good stuff here, I think. These divergences are not immutable forces. In other words, they can be changed, they can be burned through, but what I'm showing you here are all the divergent highs in recent years. They're all marked. Negative divergence between the indicators and price, and you had, this was a bear market in 2009 that took small caps down, Russell 2000 down about 60%. You had a drop there. Let me move this trend line out of the way real quick so I can measure easier. This was a drop of about 32%, so forth, so on. So well into the double digits. You can see them all, and that's what we have now. Divergent high, correction. Divergent high, correction. Divergent high, continue to build, correction. And that's all 20-30% drops, these corrections. Divergent high, correction. This one actually extends out. Yeah, it does. I don't know why my line's there. I'm going to put it on there. That should have been a line right there extending that divergence. So it's really an extension of the previous divergence. That was pretty much a double top right there. And then there was a big drop. So that's it. Or this is it. We've come full circle. Same technical posture. And you can also see, it's hard to use cycle lines. There's no predictability. Sometimes there are, and I've used cycle lines for certain things, but what I'm getting at is, every so often you're going to have corrections. And some come farther apart than others. But it's just it's a constant in the markets. Just like we're going to have season changes. Sometimes winter comes early, sometimes it comes later, but you're always going to get those. So that's it. And again, the divergences are very clear, very pronounced, very steep. And you not only have the divergences, back here you didn't have a very clean uptrend line in which to trigger a sell signal, although there were other sell signals triggered on the shorter term time frame when we had that big drop when COVID first was the thing. But boom, there it is. So I don't want to spend much more time talking about it, just trying to paint the big picture for you guys in case that we do get those sell signals. Right now I know it's, a lot of people would scoff at thinking we could drop 20%. And look, if we don't, we don't. That's it. Sell signal is, or a bearish setup is only a setup, a potential bearish trade, pending a sell signal. And right now we don't have that. So, hey, maybe we do this. And if we do that, 6 months later or 9 months later, I may be talking about these divergences, how much bigger they've gotten, and then looking for an even bigger drop. Again, that's just one of many scenarios. So we'll take it day by day, and let the shorter term charts be our guide. Right now, here's 60-minute divergence on IWM. that could play out. We had a pop number one, but so far we had divergence. They sold it. We have divergence again, but they're selling it now, and it would be quite bearish to see this 60-minute divergence get taken out. It would be a change of character, because in a bull trend, these 60-minute divergent lows are usually the catalyst for the next leg up. And if they're burned through, then that again is going to be quite bearish. So that's it for the indexes. Let's move on to those other things I talked about. Give you a quick update on Palladium. Did an update this morning for you. There it is. Laid out two targets in the video yesterday. Told you a break above 776 would be your entry. Gave us a quick 6% pop. Remember, when you're looking at levels here, these are the actual resistance levels you want to sell a hair below. We almost hit it, but of course reversed just slightly below that. So that's certainly a tag. Considered a hit of the first target. Pull back. Where's your objective entry? Right there. 776 was our breakout point, or 777. Really, you could step in anywhere from now, because we're close enough. We're at 1800, 1802, down to, but not below 775. That's about where I'd add to if you want to recycle in, if you took the quick buck, or maybe you didn't take the trade. Remember, I'll show you futures. I've incorporated futures much more into trade ideas on the site over the last year or so. I mean, because I've always traded futures. I know a lot of you don't, but where I'm going with this, a lot of these targets are hit outside regular trading hours. So if you were trading PALL, that target was hit before the market opened today. PALL may trade, but I know it's going to be fairly liquid in the pre-market session. So it's just easier to have sell limit orders on futures. You can go to bed, and your targets are sometimes hit at 3 in the morning, 6 in the morning, 5:30 before you're up. It depends when you get up. And then you get out and you wake up and you've been filled at your profit target. And now you could recycle back in for potential swing up to that next target. Now, I told you yesterday there were rough targets. I'll probably give you an intermediate target somewhere in here in between, but that's where we could be headed up. Or you get out, you hit and run. So, a lot of the metals and a lot of commodities have been kind of slogging around, consolidating for months. So there's nothing wrong with taking a 6% gain in one day, moving on to the next trade. If you annualize that, that's the thing about active trading. Let's just say you did 6% a month. That's going to annualize out to somewhere north of, compounded well over 100% a year, but at least simple, 6 times 12, 72. So that's swing trading for you. Get out, get a hit, hit and run, move on to the next one, or swing it up. But the reason I want to do that update is I also want to mention I'm liking platinum as well. So this is platinum. We're looking at 6-month chart, 2-hour candles. This trend line comes in, touches a high that's just beyond this chart, but so there was a trend line here that I've had on this chart for a while. You had a divergent low right there, a breakout, a back test, and I actually highlighted this one, I believe, back then as a long trade idea after it was a short before that. No, this is platinum. That was palladium. I believe I highlighted this one as well in that breakdown back test. I'll have to check the notes, or you can check the site, use the search function. But either way, that sparked this rally here, and we had this uptrend, and we had a divergent high there with a correction. Then we recently put in another divergent high, and really it's an extension of the same divergence. It was just bigger divergence that was building, and at that point, so there's your second or final divergent high, and then boom, this big drop. Okay, so now where are we now? I think it's a setup. It's looking nice. I almost posted it this morning. I even marked up a chart, but I figured I wanted to explain what I think may happen to this one. So you have this downtrend line right here, and you have a previous reaction low right there that come in around together. So this could be a whipsaw right here. We've broken out. I'll zoom in. I'll zoom in a second to the 60-minute chart. But we do have a nice clean downtrend line and a breakout, but so far not very impulsive. You have a divergent low. This is a bullish falling wedge. So what I think may happen, and I'm leaning towards, is extend these divergence lines like this, get one more thrust, come in and back test this line, just like you did here. Broke out, and then you back test at lower levels, then it took off. And if that happens, you're going to have dual, potential triple support. You'll have this previous reaction low, and you'll have a back test to this longer term downtrend line right here, and a back test to this trend line that starts right here. And so it could take off because we've broken out. I'm liking the metals right now. I'm going to get to gold in a second for you. So one option, if you don't want to miss it, because you may not get that. Market doesn't always give what you want. You could take a starter position here, add on if and when it gets there, and then here's my targets, roughly, I'm rounding off, 971, 1000, and 1028 right now. Let's look at those. Let me drop it down to the 60-minute chart, and then I'll get to Pplt, the ETN or ETF if you don't trade futures. All right, so this is what it's looking like on the 60-minute chart. Nice, clean, bullish falling wedge, right? Just like you had a bearish rising wedge right here with negative divergences, you have a bullish falling wedge confirmed with bullish or positive divergence. However, sometimes a wedge will break out and you back test, and there's that previous reaction low. So really, let's keep it very simple. Probably confusing some. It's a buy zone right there. Buy down to, but not below that point, anywhere from here. And I'm leaning slightly towards that little more downside, and then a move up there. This on the 60-minute chart, there's the first target zone. It's about 999 to 10. We'll call it 1,000. I think that's what I said on the other chart, 1,000. But if you want just a single simple target, and what would that be if you took it here and you hit it? It's about 7.5%. And if you took it from down here around that previous low, you're talking about 12%. So then your stops would be commensurate or in line with whatever your cost base is. In other words, if you took a half position here and then you scaled in maybe another half or a third, a third. Again, there's so many ways to trade it, and that's why I've kind of backed off, putting hard stops. I'll tell you where sometimes I'll show you where a suggested stop is, especially if I'm taking a trade right at support, and I want to keep stops tight. I'll let you know. But again, one stops are going to be commensurate with their specific and unique entry price, as well as your preferred risk reward ratio. Some people like a 4-to-1, some people will take a 2-to-1 risk reward ratio. Just keep in mind, over time, the lower your RR, risk reward ratio, in other words a 2-to-1, you're risking a dollar of loss to make $2 of profit. You're going to have a higher success rate on your trades. If you have a 3-to-1, you can have a lower success rate overall on your trades because you're making $3 of profit for every dollar you're stopped out on every trade. Next up, let me give you the ETF for that. Pplt. And see, you can see here as well, you have I haven't touched this chart in a long time. This line's been here for a while. We traded off it. There's that previous reaction low. It's around $84. So a jog down to that would put you at really nice support as well. Sometimes you reverse just shy of support. If the metals take off soon, it could. But there's that same downtrend line I gave you on the 60-minute chart, roughly. And that would be a buy. See, right now we're getting close. We just hit oversold, and it could take off from here. So again, same story. Buy here about 87.22 all the way down to 84 with a stop somewhat below. It may want to overshoot that if it does drop down there. And then targets, you have a gap. You use that. Here, let me get you the 60-minute chart, and I'll show you some targets on the 60-minute chart. Pplt, boom, that's it. I already mocked up this chart to get out to you this morning, but I want to do the video. That's why these trades aren't always straightforward. So there's that downtrend line. There's the previous reaction low. All right, so we zoom in, and there's a breakout. So far, they're not really buying it hard. It could start to take off any minute now, and I think it will if gold and platinum and silver have another run up, or palladium, that is. This is platinum, or you go down there. So there's your scaling zone. It's not a very big scaling zone either. And there's the purple lines show that alternative scenario here of a drop down. Keep those divergences intact. And there's your targets, unadjusted, actual resistance levels, but there's a nice gap right there, about 91.50. And then the top of the gap's up here, but I would target a little bit below that. I think if we get up there, a lot of eyes are going to be on that gap. So that level is right about 94. So maybe sell a hair below 94. So 91.50 and 94 roughly targets. Alrighty, next up, let's talk about the metals. I'm going to go to gold futures. I like to use that chart. You can trade GLD or even the metal or the miners as well. But let me queue up GC. 1 second here. There it is. Okay, so the futures have rolled since the last chart I was covering for the last few months. These are now the February contracts, and there's that level that I was harping on before. I think it was 1809, 1810. Over time, the futures are going to change. These levels will change, at least on this charting program I'm using, and so that's the big level right there. You can see all these reactions. There was the breakout. It started to run, and then before it happened, I said if and when that broke out, that would be bullish. But then when we did, I kind of changed gears on you. And a couple of weeks ago after the breakout, I said I seen too many people get too bullish too fast, too late, and so that made me bearish. And not only that, but you had the technicals as well. You had a bearish, beautiful bearish rising wedge, negative divergence. Again, I haven't finished mocking up this chart because it's rolled, but I had the divergence lines on the other one, the previous one, and that's what happened. These divergences played out, and it caused the breakout to fail. And as to be expected, a lot of stops would hit. Okay, I've covered all that. Now we've come full circle. Look at this. Bullish falling wedge. Big, strong, positive divergence, right? And nice support right there. Why is that nice support? Well, it was a big divergent low right there and a rally. We had a couple reactions there. It was significant here. We broke it and the stops were hit. You had a waterfall sell-off, but then gold recovered it. I mean, the trading has been all over the place. You got to be, if you're trading gold lately, it's not a buy and hold investors market. You can be. I think longer term gold looks good, but you're not getting paid dividends. So my preference has been to actively trade the metals lately, and there's been a lot of just nice setups. Again, you can see all the bullish falling wedge, positive divergence right here, and that was a rally there. So here's what we have right now. Uptrend line support, price support about 1763, bullish falling wedge with a fairly well-defined trend line and positive divergence. So if it can hold here, you can go long at support. That's again been kind of, you almost have to expect false breakdowns and whipsaws because there's been a lot of them in gold lately. But there's a support runs down to, let me give you a second line. If you're going to take it here, you can't fall in love with it because sometimes a breakdown is the real deal. Sometimes it's a whipsaw. So you can buy it anywhere from 1763 or where we're at right now down to about 1750 with a stop somewhat below, or wait for a breakout above the falling wedge pattern. And I would swing it back up. You know what? There's going to be one stop in between, most likely about right here. 1819-ish, and then 1840. We get above 1840 again, since we already had the one whipsaw through it. I think it'll run. So this is what I'm looking at in gold. There's obviously a previous reaction high. So I like it here as both a tactical, short-term trade up to that 1819 and 1840, as well as a potential longer-term trade. That's GC, and of course you can trade GLD or any of the leveraged ETFs or gold. Silver, let me give you that one as well. SI. Okay, this one also rolled recently. We're on the March contracts now, so I had to just mock this chart up for you. There it is. You have support, price support here. We had a little brief whipsaw down through there, but a lot of reactions there, and that's right about where we are. So you can buy it right now at support. But I wouldn't go all in, to a full position, because you're right on trend line, right below trend line resistance. So you have, just like gold, you have this little wedge type pattern here. So you can, a lot of ways to trade it. You can trade it here. You have bullish divergence. I put good odds this will break out, whether we have another thrust down, test those lows. But if we break out, here are some near-term targets: 2380, 2470 right there, and then probably target that previous reaction high up there. So there's your setup for silver. So the metals look primed to run: platinum, palladium, gold, and silver. And that's it. Just watch for a breakout, and the more of these that break out, the more likely it is to break out, and the whole lot of them will stick. And that's about it. And just a quick update on cocoa. I'll give you an update yesterday. We hit our first target, 24.26 yesterday. That was along here on the breakout of this nice, steep, clean, bullish falling wedge. Took it there, ran up, hit the first target, and the first target was resistance, been cleared. And whether we backtest or not, hard to say, but that should open a door for a move up to my next target there, which is the intersecting downtrend line and roughly 25.46 resistance. So all right, those are some of the things that look good, and I'll certainly do another update today on the equity markets. Like I said, it's Friday. I'm very eager to see how we close the week. If we get any clear sell signals on those, on the weekly charts, we'd really have to drop hard today to have anything solid. But again, I'm referring to, these on the weekly chart here. There it is. These bearish engulfing candles. So far so good. Like I said, we've got a red candle early in the day. That could certainly change before the close, but right now it's a check mark. But again, it's a weekly candle, so we have to wait till the end of the day to definitely give a check mark there. But so far it's red now, and as I often say, when it comes to sell signals, the redder the better. Especially that's what you want to see after a bearish engulfing candle. You can get this candle down here today, well below that one. It's just going to help. It won't guarantee anything, but it will just increase the odds that that was a potential pivot or topping stick with more downside to come. All right, I'll pick it up later today. This has been Randy Finney with Right Side of the Chart. Have a great day.